Hello and welcome everyone. We've gathered an illustrious panel today of some folks who I've really enjoyed talking to over the past few months, and obviously what's been going on with uranium. I think that is probably time that we try and talk to these chaps about what the future holds. So joining us today, we've got Roger Lemaitre, President CEO of UEX, David Cates, President CEO of Denison Mines, Chris Frostad, the President CEO of Purepoint Uranium, and James Sykes, CEO and Director of Baselode Energy. Welcome, gentlemen.
Yeah.
Good to see you. Now, I think we might just sort of start off, get you each to do 30 seconds on the company so everyone knows who and where you are. And David, why don't we kick off with you first?
Yeah, thanks, Matt. And look, I think everyone knows Denison really well. We're a developer in the Athabasca Basin. But I want to spend just a minute here talking about something that's really important to our company and I think to all of the companies on this panel. And that's to acknowledge that September 30th is Canada's first National Day for Truth and Reconciliation. Now, this day has been observed by many in past years as Orange Shirt Day, and that's been in support of the Every Child Matters movement, which honors those impacted in the past, present, and future by the terrible chapter in Canada's history involving residential schools, where many children from Indigenous communities were forcibly separated from their families. And while this is well documented in the findings of the Truth and Reconciliation Commission in 2015, the tragedy of residential schools has rightly been brought back into focus for many Canadians with the recent discovery of several mass unmarked graves of school-aged children at former residential school sites. And as I've reflected on this in recent months, and I'm sure others agree, I don't know how we can truly do better if we don't first take the time to understand where we've gone wrong and how it has impacted those involved. And so wearing orange not only honors those impacted by residential schools, but I see it as a way to show other Canadians that there's something going on in this country that they need to know more about. So I urge everyone to please find the time to learn more about the effects and the efforts of the Truth and Reconciliation Commission and the impact that it's had on Indigenous people in Canada. Okay. Thank you for that time, Matt.
Okay, well said. And I think on behalf of everyone here, well done for bringing that up. You can't ignore these things. You must deal with it. And Canada sounds like it is. We're here today to talk about uranium. We've got a big and varied investor audience interested in the uranium space. Some true catalysts have happened over the past couple of months. And I want to talk about the impact on that in terms of your strategies, okay? Because you've got to be agile and adapt. So I don't know, maybe start with you, Chris. Given the movement in spot prices, which is the thing that most people new to uranium look at, and perhaps the impact on decision-making of the uranium buyers, have you had to change or adapt your plans, or is it just steady as she goes?
Well, I think, yeah. I mean, Purepoint's a uranium exploration company in northern Saskatchewan. We've worked there for many years with the folks on this panel. And for sure, we're seeing a very different year here. It feels a lot like 2004 again, but in a lot of ways, it's not. A lot of things have changed for those of us out in the field. As an exploration company, we're pretty much driven by our ability to get out and do work in the field, which requires a great amount of financing. So for the last while uranium prices have been languishing, we've been trying to keep our powder dry and focus on only that project or those projects that we can where we can see the most value and do the most efficiently economically. In the last years, we see the markets anticipating what's going on now in terms of the price of uranium and things getting ramped up. And certainly things are getting ramped up in the basin. We've been able to go back to a lot of our projects that we've kept in good stead and good standing, and really start to now, we've been able to raise more money, I think, as we all have been, to get out there and really start advancing those projects in earnest now, in a way that we haven't been able to do in the last 5, 6, 7, 8 years.
Well, I think that's the interesting thing, that you guys are going to, well, if you haven't, people are throwing money at you now, but I think a lot of you have actually taken the opportunity to raise money at higher prices, therefore cheaper capital. Roger, with you and David, recently had to work together trying to come to some sort of agreement on some of the URD project assets. Obviously, you all know each other well. That was a kind of seemingly very gentleman's agreement type arrangement there. But you've got to look to the future now. Has this market of the last couple of months helped your plans for the future? Or, is it a case of you've got enough projects to focus in on and you've got your head down and that's what you should be doing?
Well, anyone who tells you that the market change hasn't had an impact in a positive way would be stretching the truth. Clearly, our ability to finance the acquisition of JCU with Denison has everything to do with where the market has been moving towards. So it's made that a lot easier. For our strategy, what it does is it allows us to hopefully up the operational tempo that we've been sort of puttering along with, working on our best targets as we should. But because we have so many projects, I think what this market is going to allow us to do is vend out projects with companies that can be sustainable. So we're going to be able to get more of our portfolio working for us, being a portfolio-based company. That's, I think, one of the biggest benefits. Sure, more work on the good projects, that you can go even faster than you were before. That is excellent for us, but also the opportunity to create value from places where we don't have value right now is really important to us as well. And the market's finally there.
Okay, and what about you, James? You're an early stage company. You had some issues with shadow, right? I think that's well known. We spoke about it around the time as well. But you've just put out a really good press release that's kind of got renewed interest in your story. But does your strategy change? One, because obviously the impact of what's going on with shadow, or two, because of the market as it stands now. What's the thinking at board level?
To be honest, our strategy has not changed one bit. When we got into this last year, when we started up, we had a thesis in mind, and we've kept forward executing on what we believe. And I think this new discovery over on Hook kind of solidifies some of our ideas. So it's proving our thesis somewhat true. So the idea is to keep pushing that forward and keep pushing the boundaries and ideas and really trying to revolutionize Athabasca. Okay,
and David, on to just that same question to you, really, but it's in the context of, I think you've done some quite cute things. You went and raised money to buy pounds. You've also put another facility there in place. You obviously did the deal with UEX. So you are showing that you're relatively agile and reacting to what's happening in the market. Do you see more moments like that and more opportunities like that, given where we are in this cycle?
Oh, I mean, there's lots of things that could happen. I think we have tried to take advantage of opportunities. We've always had that mindset while I've run the company that we have to adapt to the environment we're in. Our strategy hasn't really changed in that our project didn't require higher prices to be able to motivate advancement, and that's always been an important part of our story. But yeah, I mean, the market has changed around us, and it's created different opportunities. I mean, I cannot say that it was ever part of a plan to buy 2.5 million pounds uranium to secure a third of our project upfront capex years before, having even a feasibility study. That was not something that would be on the radar a few years ago when the market was more challenging. But I think it's incumbent on us when we manage our companies to look at the opportunities in front of us and see how we can make use of them for the benefit of our shareholders. And that uranium purchase has already worked out well for us. We're looking at a almost 50% uptick in the value of those holdings, meaning that we're now covering almost half of our upfront capex instead of a third with those holdings. So it's a good example of how you can use some opportunities or some insight into the opportunities in the market and try to make the market work for your shareholders.
So Chris, if you look at what's happened, obviously we all have to sort of tip our hat towards what Sprott has done for the marketplace. You've all been beneficiaries of this. It's set the retail market wild. The conversations in social media and chat rooms is extraordinarily ebullient about what's going to happen here. A little reset in the last couple of weeks, but you've been very cautious in conversations with me, citing lessons of the past. Do you think that there's anything to be learned from the past, or is this just an entirely new frontier?
Well, certainly there's things we learned from the past. I think I think the focus on Sprott is a good one. I think the market has been, and particularly the retail market, has been waiting for something to move in the uranium space for so long. This isn't something that's come up in the last 6 months. There's been chatter about this for 5 years, 6 years, everybody waiting for that time when things are going to move. So I think to see Sprott get into the market the way they did, and the arrangement that David made with them was well timed and a very good move for the market. And then to see how quickly the spot price reacted to it, I think it's just got everybody in a pretty frothy state right now, and that's fair. I think the market's always probably focused too much on the spot price. But really, that's the only transparent number people have got to hang on. So they're watching it closely. And I think behind the scenes, certainly there's more people than just Sprott buying in the spot. So it's not just them driving it up, but you're certainly seeing those numbers snapping together closely. So the market's been desperate for something to hang their hat on and get excited about. I think Sprott provided them with that. Certainly we're seeing with I think David and Roger would agree, and James as well. So when we talk to Cameco or Orano or some of our other partners, they're still waiting. This is really the market anticipating, a more stable and balanced commodity market in uranium, and but we have to take advantage of the market excitement. That's what we have to do. I mean, we're not in the production game, so we take advantage of the market as it reacts today, and the other folks on the panel react at different stages.
So I mean, Roger, do you think that the retail market is correct to be excited, or would you urge more caution? What are your lessons of the past when the market last ran?
Well, I think what I think we've seen a few false starts. And we did the last time the market moved too. And I think for us, cautious, yes, for sure, because at the end of the day, the market truly moves when term price starts to move. And that's when the utilities decide, okay, now I'm concerned about where things are going, away we go. And I think what people have been really concerned about over the last little bit, or what I've been hearing from people, is that why isn't the term price moving? Why is the term price moving? And utilities have a little bit of room to wait and see where things are going. I think when we see movement in the term price, that's great. But the spot price movement is, and the fact that Sprott's taking pounds off the market and going after every scrap pound, not just the big chunks of pounds, which is a price setting mechanism on its own, is if this isn't the wave, and I believe actually we're at the beginning of that wave for one other reason. It's certainly going to take that supply shortfall and crunch it back. If whether you believe it's happening today or whether it's 2 years out or 4 years out, as the more negative people do, it's pushing things in a different direction, and it's shaking confidence in buyers, the utility buyers at the end of the day. So yes, I think for us, if we don't see the term price move, that would be the one that's the real trigger for whether we're on that run. That being said, when you look at the last time the market entered a stage of backwardation, it was in October of 2006, where on the day of the Cigar Lake flood. And so I think Sprott might be that triggering event to basically give the utility buyers a little bit of a wake up. Hey, the market's not quite as for them, not quite as easy as it might have been 2 months ago. So it's their psychology of those groups are really going to be of the buyers are going to be the real key as to whether things move forward. But I do believe, because we're seeing change in pricing behavior, that we're closer to the end than the beginning that we were years ago.
So James,
Matt, can I just jump in, Matt? I hate to do that, but look, Roger makes a good point about the long-term price, but I think it's important people understand long-term price has moved. And it's moved just shortly. I mean, it's gone from just over $30 to $40 in the last price post. So it's maybe subtle compared to the spot price, but that long-term market is starting to converge faster than I actually was expecting it. I do see the utilities as slow-moving groups, and I was thinking that essential arbitrage between spot and term would persist a bit longer. But at last price, I mean, we've seen 40. So if we took the spot price aside and said term price has gone from 32 to 40 in under 2 months, I think that would be a pretty bullish sign.
I completely agree. Yeah.
I think it's a good indicator of the fact that this market is actually on track to improving.
So,
and I would agree, David, because it was. I remember being the only exposed Cameco person in 2006 at the Nuclear Energy Concert on the day of the flood, and the utilities were yelling at me for saying how we're raking them over the coals, and I have nothing to do with that. I'm the exploration guy. Meanwhile, they're in their Blackberries trying to fill out orders. So it's sort of like watching the 5 stages of grief. They get through the anger stage, and then they get into the we better do something about it stage, right? So you're kind of right there.
It's interesting because typically the term lags spot price here, but given the rate at which both have moved, and if I then sort of look back to conversations we've had, earlier in the year, pre-split, and you look at some of the trade bodies, what they were projecting here, everything just seems to have accelerated at rates none of us were expecting. Can we expect to see more of the same, or has split just done enough and is going to sit back and see if anyone else joins the party? I know there are other buyers, but nothing meaningful, nothing as meaningful as split. So, I mean, David, probably just back at you on that one, David. Your expectation of timing and ramp up now, of the rules changed?
Well, look, I mean, there are other buyers. We are hearing that there are other buyers in the market, whether they be a mix of utilities and other financials. There are other buyers in the spot market. There's definitely now buyers showing up in the term market, which is very encouraging. But look, Sprott has exposed the fact that discretionary supplies are not as deep as utilities would have expected. And I think that does change the game. A lot of utilities are counting on those same discretionary pounds in the spot market as insurance. And part of the reason why they have not had a call to action to go sign term contracts. Now that Sprott's followed, years of production constraint and producer buying and developer buying earlier this year and UPC buying in years past, Sprott's come in and really, I think, drained the bottom of the barrel and exposed that the utilities can't count on those pounds. The thing about Sprott is they increased the size of that ATM to $1.3 billion. At last check, they're still close to $1 billion to go. I mean, they're a little bit less than that, but they've got a lot of room on their ATM. It is a question of whether the investor interest will keep pricing it at a premium for them to use that. But I think this structure of investors participating in the market through Sprott will persist. And at the same time, you're going to see other participants see if there are ways that they can exploit the market and be alongside Sprott, all while the utilities have to ask, okay, what do I do? How do I actually get my pounds? So I don't see this as being the end of where this goes in terms of Sprott's influence in the market. I see it persisting.
Okay, and this is probably one for James and Chris. James first, if you don't mind, which is, in a kind of very meaningful way, you care about what the utilities are up to because it drives the market. But in another way, you've got to focus on business, doing your business, don't you? So do you enjoy being part of conversations about producers or near-term producers, or do you see very, very little benefit in that, and you've got to get your head down and focus on what you do and do it right?
It's all part of the same sphere. So I do keep an eye on what's going on as much as possible. But yeah, like you said, my main goal is to make sure that we can make these discoveries, that we can add pounds into the market, and that's part of that thesis going forward, is that we want to make those discoveries that can hit the market in very short timeframes.
So what are you saying to retail investors then? What should they be looking at? Because it's going to be slightly different from a Denison investor, isn't it?
Quite a bit. Although Denison has the track record on the go and has made a lot of moves and looks like everything's coming along nicely. We've just taken a slightly different approach that to the retail investors, we're in the right market, and we're looking for, I guess, new styles of unicorns. Whereas everyone is always searching for the monsters. You don't need the monsters. You need the economics. So why keep looking for the monsters that aren't economic when you can find, the unicorns that are economic? And that's basically where we come in and exactly what we're doing. trying to prove everything forward.
Okay, Chris, same question to you. You know, does what the utilities do in this market over the next couple of months have any bearing in terms of how you run your company?
Well, yeah, I mean, absolutely. I mean, we and a part of that comes from the kind of the fence we straddle with on a couple of our projects with Cameco and Orano, because in that case, we have to follow their lead and their objectives more so than what we might on those projects that we run 100%. So it's very interesting to hear where their direction and their objective is, because they're looking 5 to 10 years out. You know, they're looking at where they're going to get feed to put in, put in a mill that's going to run out 10 years from now, and that's where money starts getting directed. So it's important that we understand and appreciate the different timelines and the different objectives and the different financials around around how our partners operate and how they're going to move forward. And so it's very, very important in that regard. On the other side of the house, those projects that we're looking at or that we own 100%, to James's point, I mean, that's the business we're in, is to go out there and spend that risk capital and find those new projects that have merit and can be moved forward in the market. That's our job out there. So yeah, it's very important that we understand what the whole cycle thinks and is doing, and how they're approaching things. I mean, I'm going to have to phone up Roger right after this call and see what projects he wants to vend out, because we have some money we need to put in the ground. But so it's certainly important for us to know where everybody's head's at and what they're doing and where their focus is.
I mean, if I look back to the last 12 months, 18 months, these uranium CEOs, it was more like a sort of collective group therapy session. It seemed, but now the party started, and behaviors change and new entrants come into the market. And again, Roger, so this to you, what do you think investors need to be aware of? Because there will be new entrants, some valid, some not so much. Give some clues as to what we should be looking out for?
Well, for the new entrants, I mean, the question is, are they committed? I mean, that's really the question. Flavor of the month stuff, where people are just coming in to start a new company, get listed somewhere, and then follow the next flavor of the month. I mean, obviously, you want to avoid those. I think you want to find companies that just pick up land, that don't have the experience like James's group does and know where to pick up good land. Just picking up land isn't good enough. It's picking up land where someone knows something or has a hypothesis of something, or whether they're doing deals with established companies like the groups here as well, and picking up land that's in the key spots of the basin. And I mean, I can get into high-end technical stuff. There's a lot of places in the basin that you probably, not that it would be zero potential, but there are places where you just don't want to go because the geology is not underneath that basin is not favorable.
And I'll throw in a number there, Roger, that we were looking at yesterday. Is since about a year or so ago, the amount of area that has been staked across the basin has increased by about 70%, 75%. And I can tell you, it's not one big flat sheet of uranium out there. So, I think to Roger's point, you're going to see a lot of new entrants coming online with a lot of closology stories.
There's a lot of CEOs with blood red fingernails out there holding on through this long period of time to hold on to the good land positions for a reason, because they're good land positions that have value. So I mean, it's hard to say any one situation, this is the right thing or the wrong thing, but those are the things as an investor you look out for. Are they picking up land in the key areas that are on the good trends or near the good trends? Or are they just picking up land that nobody wanted 6 months ago?
You're all Athabasca companies, right? And there's a coverall. If it's Athabasca, it's got to be good. And what you guys are just saying to me is there's some moose pasture out there. Watch out for that. Us poor investors don't know. So what would you say we need to look out for? I mean, James, you're an explorer. You've got a great track record of making some discoveries. You've got a slightly alternative thesis on the Athabasca play. So, why is your story going to succeed? Why is it not one of these stories that, Roger's just warned us about?
Well, to Roger's point, he makes a very good point, especially with the companies that have held on for a very long time. Those companies with the longevity who have been here since the past bull run, those are the companies you want to bet on. These are the guys who who are invested in it. These are the guys who didn't get out on the flavor of the month once uranium crashed. These are the guys who stuck around, stuck with their best projects, staked other areas once new ideas came out, and that goes a long way. The perseverance pays off. You can see other companies around that have done similar things, that they're starting to see success now. Where we kind of differ, we bring new models, and we're seeing that new cos, or even some of the companies who have been around long, are starting to subscribe to that too. What we've done is not new. It's actually quite an old model. It goes back to Eagle Point, goes back to Rabbit Lake, to the 60s, but it's just trying to reinvigorate that. It's looking at things differently, a whole new perspective. And
yeah, just to clarify, James, what I meant by that, I'm a little more, you betting on the jockeys a little bit more here than just betting on the fact that you have moose pasture. And so, yes, you bet on the jockeys, and then you bet on their ideas and packages.
Yeah, it's interesting. I mean, we're seeing a few names pop up with not necessarily the uranium experience, but they've got the financial backing, and maybe that's all it takes these days. Would you agree with that, David?
Well, I think that may be all it takes to get started. Doesn't necessarily mean that it's all it takes to have a good business. Look, I appreciate hearing all the perspectives on this. Look, I think people matter. People really matter to these companies. There's a lot of things that change. Geologic models do change, and so different ground can be more or less attractive at different times. I mean, we use our own example of our focus on exploration now has gone strictly to ISR amenable. So these are the sandstone hosted deposits that people have basically stopped looking for because they thought they were unminable unless you had 300 million pounds. So we've changed that equation. Now we're looking for that. James has got a different model with Baselode. And look, I think you really have to look holistically at the team and their strategy. Where I would be cautious is around companies that, whether we call it closeology, where that's their strategy. Oh, this is near stuff that's good. That doesn't mean it's going to be good. And the other thing is retreaded assets. Things that were there, didn't survive, or were left on a scrap heap and have been pulled back off the scrap heap. I mean, there's kind of a reason they were on the scrap heap in the first place. So not every uranium deposit will become a mine. But those are certainly valuable assets when people are looking to start up new companies and have a view of how it would happen. Well, look, if it existed before the last cycle and it didn't get developed in the last cycle, you do have to be critical and ask why is that a good asset to be exposed to today? Will this cycle be different? Will something else happen? Is there a new strategy around that asset? So I think that's where people need to think. People and strategy, really understand what is the business's plan.
People and strategy are really important. And I'm glad you bring up reference to retreads, i.e. basically people trying to reboot something which didn't work before. But what they tend to throw at us poor investors is we've got new technology, we've got new AI, and we're looking at the data in a different way. So this time it's going to be different. And that's what we suckers fall for, right? We believe that sometimes. So again, how do you differentiate between what didn't work last time for a reason and what shouldn't work this time for the same reasons, but we're told different? What are the signals? What are the phrases?
Oh, look, so there's always potential that someone will have a bright idea that does change the way you look at a project. Again, James has a different model for exploration. We've got a different mining model. We took something like Phoenix and other ISR amenable deposits in the Athabasca that, like our Waterbury and THT, 2% at 10 million pounds. Like nobody thought that would be mineable in the sandstone. And yet now we've shown actually it could be, bottom cost quartile. So those things can happen. That's why you have to be critical about the people and the strategy around it. I think what I worry about is assets that may be new investors to the sector, because there's a rotation of investors over the decade between cycles here. New investors to the sector might not realize some of the assets are just old and cold and might never be revived. I'm being critical, but like that is an area I think people have to watch out for. Is they may not know it's an old asset, but it actually was on the scrap heap, and now it's been repackaged, and maybe there isn't a new strategy, but maybe there are pounds there, and maybe they look cheap, but there's again a reason those pounds were on the scrap heap.
And there's a reason why the four of us didn't pick it up in the last couple of years ourselves. But
Exactly, Chris.
Along the same lines, is the terminology, and it's very difficult to educate investors. I mean, we can't do it. And one of the things I remember from the last go round was the noise. It was unbearable because everybody was making up new terms, new terminology, trying to put bigger, better numbers out there. And what it led to was a confusion of the market that was crazy. It got to the point where if you couldn't put out a result that was over 20%, then it was probably garbage. And it's nonsense. Like, it was all nonsense. And so the biggest problem I see with that investors have got is digging through that terminology and, what is real, what is, and, we've all got examples of press releases we've winced at because, they've made up some new attribute that gave it a big number. That's hard. And it's hard for us, to put out reasonable news and reasonable disclosures and really prevent ourselves from getting into that, that niche of trying to sensationalize something that's highly mediocre, or the market doesn't necessarily recognize a good result, to a large degree in many cases. So that's a tough part.
I'd also say if someone brings an idea that says we have the revolutionary new technology that will make the discovery, well, I'm trying to think through all the history of the Athabasca Basin. Not one thing changes everything. It's one more piece of the puzzle. Yeah. So knowing how to do things the way, you also want to know what's been done in the past and how it's been successful and how this is going to augment that piece of information. If someone's telling you that they got a piece of satellite data that says, oh, here's the next discovery, well, that could be one piece of the puzzle, and it's only a piece. And so not one thing changes the universe. Ideas definitely can change the discovery universe, but it's in context of what they know. But one piece of technology, sorry, I don't buy that. We use them, but it's a piece of the puzzle, not the puzzle.
I mean,
layers upon layers upon layers.
Right.
Yes, very much. Yeah.
But do you feel, because I mean, Chris, you referred to it there, the noise that was out there, it's highly competitive. And I think that will come as well. That will come back again, that they always do. Is there pressure on you to adjust or tweak your press releases in relation to what other people are squawking about? Because you don't want to be left behind. And perhaps you have the view that, well, if they're doing it, we should do it. The rules have changed. And in relation to what they're doing, it isn't so bad the way we're going to reframe this. Roger.
Well, I would never do that, Matt. Of course. I mean, there's lots of pressure to do that because all of us, when we look at these things, we understand it more than your average investor does as well. And it will constantly irk us to see somebody put out some news that is, shouldn't have been as exciting as something you put out. And for some reason, it's getting a bigger spotlight because they called it something insane. I mean, we all run into that. I mean, we're getting yelled at by investors and by boards and by everybody to, what's wrong with our stock price and why isn't this going up and when are we going to raise money and on and on. So there's absolutely pressure to constantly do that. We've been somewhat governed a bit because we've been working primarily on our Hook Lake project, which is with Cameco and Orano, and those guys won't let us say anything that is not, appropriate and proper and within the lines of whatever. So I mean, it's kept us honest in that regard. But there's absolutely, it's tough writing these press releases and making sure that you're saying it a way that an investor can understand it, that a layman can understand what you're trying to tell them, without throwing so many adjectives in there that it's hard to take.
Superlative.
Touching on a point like that, so we're also in a new era. We're in a technological era in which Google plays an important part about what people are going to read. So I'm guilty of this, is I will modify my press releases to really hit buzzwords that Google would pick up. So your average investor will see these things. Whereas if you don't script them properly, they get completely overlooked and they don't get the attention. So as explorers and what we're all trying to do and raise money and get the investor's eye on our companies, I think this is like I said, it's a new era, and we need to leverage these type of assets that are available to us.
No, I think technology. Well, I was actually going to come on to technology, but I may as well go to it now, which is the environment in which you guys are operating in has, traditionally been, very obvious, hasn't really changed for a long time. But in the last 5 or 6 years, I would say things like Twitter and the social media and the chat rooms and so forth, everyone is empowered to get as much information as is out there. And you're getting a lot of advice from your shareholders now. How does that make you feel, James? There's some smarter people than you out there who know exactly what you should be doing.
Yep, absolutely. No, I take everything. I take the good, take the bad, take the ugly, and just, you mix it all in, what works, what doesn't. Sometimes you get some good ideas from people who are out there. Just, sometimes people who are just new into the whole industry will provide you with some new information, or sometimes they've got contacts. It's a pretty wonderful world, but it's scary too. When you see the power that investors online can have with Reddit and things like that, it can be a scary situation, but it's roll with it.
Okay, rough with the smooth. Rough with the smooth on that one. I noticed a announcement by the Australian government. I know you're all Canadian companies, but they had to make an announcement about a Telegram group, which was the fill-in name of company Pump and Dump Group. It literally, not even trying to hide it, but that's the sort of things that are going on out there. And sometimes it'll work for you and sometimes it'll work against you. And I suggest mostly against, or for a short time it might work for you. Roger, I want to come back to press releases, because obviously you and David, with regards to the JCU deal, you both had to deal with press releases. I think Chris was referring to not making up, sensationalist type names for technology and stuff. But you guys also had to be very careful with the use of press releases when you were, both tippy-toeing around that deal. So you understand the power of it. Did you think that with those press releases you could have gone further in retrospect?
You can always say more, and the trick is that you have to backpedal. If you get it, if it doesn't work out the way you want. And certainly when we did our press releases, and when David and I were working over how we were going to get to JCU before we teamed up, it was a very difficult spot to be able to say things. And I'd rather be a little understated on some things and then over deliver than deliver the opposite. And sometimes things get beyond your control and you can't do what you want to do. So no, I don't. I think for us, the technology part has changed. The message and the methods that you deliver it might change over time. I mean, more than just the press release. I think I go back to our founding CEO here, and he got to live just with press releases for the most part, because the market, it was in a good spot. There wasn't as much technology out there, so you had to get out there a little bit more, but you have to be even more careful about what you say, because it comes back to bite you. I mean, I can sit there and say, hey, we've had every intention of spinning out a cobalt company for the last 2 years. I get daily reminders about it and going, well, it's when the market makes the right sense to do it. And it's not just a let's get it done. It's not a task. It's when it makes shareholder value. And sometimes those things you have to hold back on. And so I'd rather say a little bit less and make sure that we deliver on it than try to say we're going to do everything and then get mislead, and people feel like get misled that way. That's all. Yeah,
you're held to your word. David, you're part of the same conversation. I better let you respond in terms of how you use press releases during that time, and do you felt you would have done anything differently?
Look, Matt, there's not a lot to talk about on these press releases. I mean, when you're in one of these types of deals, it's pretty restrictive in terms of what you can say, and everything's read by your lawyers, and you're trying to convey the material facts to your shareholders in accordance with your reporting and compliance requirements. I do want to just pull on a thread from one discussion earlier around the power of the sort of social media and retail investor. I certainly acknowledge that, but I want to make sure that everyone understands that while the uranium sector has benefited from a broader interest from retail investors, largely connected to the clean energy transition. It's not retail alone. And actually, when you look at the kind of money that Denison has raised in the last year, none of it's come from retail investors, or a very small amount. It's come from large institutional investors. And so I think it's important that people respect that, yes, while the social media pieces, and certainly for certain companies versus other companies, it might be more relevant owing to market cap and things like that. But this uranium market that we're seeing is not singularly being driven by Reddit or by folks on Twitter. They're an important part of it. But the big blocks that are shifting capital, we see that coming from actual institutional investors that have not been traditionally even resource investors, let alone uranium investors, but that have opened their mind to the space because of the opportunity they see around clean energy transition and nuclear.
Yeah, I think that's working its way down the chain, David, as well, to the smaller cap companies, because we certainly see the same thing.
Right. Okay. But so are you saying that things like the Reddit uranium squeeze, the silver squeeze, and all those other squeezes, you think they have some small part to play, but they have no bearing on what institutions decide to do or not to do? Is that what you're saying, David?
Well, look, I would never say that the Reddit crowd has a small part. They certainly have a part, and they certainly are contributing to the overall market for our companies and our commodity. And they've certainly drawn attention. But I'm pointing to the fact that when you sort of look at the piles of capital that are moving around, that we have seen some really large stacks pushed in from large institutional investors, and they're making their own determinations. They're considering the market fundamentals and the basis for investment on their own. They're not investing based on a hashtag uranium squeeze.
Well, actually, it's interesting how the game is played. I think some companies do get affected by that. Some of the earlier stage, smaller market cap companies, because retail is how they get the liquidity and the movement. And if a group goes after a company, I don't necessarily think it's a good thing, but you are the beneficiary of short-term attention. I mean, and obviously, Chris, your company's of a certain size, was of a certain size for quite a long time, and obviously there's been a resurgence of interest and things have changed. But do you? I mean, what sort of questions are you sort of dealing with from retail? And do they care about what you're doing, or is this just about a market play, a thematic?
Yeah. I mean, from the retail side, it's pretty simplistic. The questions are, where's this coming from? It's a lot of education. Right. I mean, we watch this every day, so we know where all the pieces are and what's moving. Investors are trying to fill in the blanks. If the long-term price went up to $40 on Monday, how come we're not all going through the roof? Well, we've gone up 300% in the last year, and the market has already anticipated this. So you're looking at that. Yeah, I think, more to David's point, though, it's different money coming into it this time. Uranium's been tough because it's hard for a big fund to make a big bet. Where do you put $500 million? There isn't any place in the uranium field to do that per se, like there would be in gold or other commodities. So uranium has always been a tough place from the investment side to get the big funds involved. And moves such as David made at Denison and others we've seen, where they've provided an opportunity to push in that big money. Now we are seeing people come into the market that really just couldn't because of the quantum we were dealing in before. So that's changing a lot. So I mean, we're getting more of a balanced participant, I guess, in this market than we've seen in a long time. We're getting our bigger funds now. We're getting our retail. We're getting everything's kind of coming around. And as we're in this period of sort of rebalancing of the commodity itself, it's going to be a funny 6 or 7 or 8 months of fluctuation and around. But it's a market kind of putting itself in order is what's happening, I think.
Yes, it seems to be. I mean, James, when I sort of speak to CEOs outside of the Athabasca, with assets outside of the Athabasca Basin, and I mean, I know you're slightly outside, but I'm talking different countries, so outside, they feel that you guys get an unfair advantage because you have obviously the higher grade. People get excited about high grade stories. it must be a lot. It's obviously a lot easier for Athabasca CEOs to go out and tell their story, whoever they're talking to, retail or institution, than those poor ASX companies. Isn't it? Is it?
I would like to believe so. I'm honestly not sure, but I see a lot of nice assets out there in other parts of the world. If you look at some of the largest producing countries, they're coming from Africa, Namibia. They've always been there, and so there are some great assets out there. And you've got a lot of other interesting assets that are ISL operated. And as David pointed to, these are your lower cost operations. These are the things that make sense. So, is Athabasca, does it have a different, or I guess a premium on the type of assets that are available? I'd say no. I'd say there's, again, different jurisdictions. It all comes down to economics in the end. What can move?
I wouldn't necessarily agree with that. I think we've seen that the cachet of having the basin plays into the investors' lack of knowledge, broad knowledge of the basin in general. When things have been bad, at least we could say we were in the Athabasca Basin. People knew what we were talking about, right? I mean, that's where it goes. How many people out there have heard of the Macasani Plateau, or? So I think it has benefited us, and be it unfairly, it's that's just
Chris. There's a reason that's the case, though, right? It's because
sure.
The world's highest grade, lowest cost uranium mines are in Canada and Kazakhstan. So there are good deposits in other places, and I think a premium is frankly generally justified because people should place a premium on assets that will be more profitable earlier, things like that. Those are the kind of things that actually would drive value. So there are other good assets in the world, but many of them require, outside of Kazakhstan, many of them require much higher prices. And I think that's why you see additional attention come to the Athabasca Basin. And I don't think it's wrong. Now, I suppose I'm biased in that regard, but that's what I would point to.
I completely agree, David. I think for investors, they can say a discovery in the Athabasca Basin has a higher degree of probability of being economic because of the history of the basin, history of the discovery, and with the more recent discoveries made and the cost profiles that are popping out from the studies, they all seem to line up. Whereas when you go to other jurisdictions, it's a project by project basis, and it's a lot harder for investors to sit there and say, a project in this part of the world will make money. And even some of the producing districts, you sit there and say, what some groups are doing in Niger is doing wonderful work. And then there's bigger projects that are sitting idle that can't make a buck. And so it's a more general rule of thumb that investors understand. And that's why the Athabasca is at a premium, because it's generally understood that it can be more economic, more likely to be economic.
But have all the good assets gone? I mean, going back to earlier in the conversation.
Yeah, we've got them all.
Good man.
Athabasca's underexplored.
Yeah, they're not all gone. There's new ones to be discovered, and there's new ones to be built. The Athabasca Basin's a big place.
Not only a big place, it's still early in its exploration history. We've gone through the first phase of the quick and easy discovery, basin margin type stuff, right at the end, conformity, simple exploration. Now we're smart people are looking at what's next. What are the next ideas and models? And that's what you're seeing in this group. What are the next ideas and models that you can bring to play to create value? We're still barely scratching the surface. And I
think it's amazing what we've all, if you went back even 5 years and how a lot of the minds on this panel have changed in terms of where uranium lives and where it doesn't live. It's changed a great deal in that short a period of time. So, certainly having some history out there, and looking at projects with intention, I think is where you want to go. But I truly believe there's still lots of room out there and lots of discoveries to be made.
From a technical standpoint, people were driven. They had horse blinders on and driven just by drilling conductors. That's been the motto for the last 50 years plus. It works. There's nothing wrong with it, but it's not always just about the conductors. You consider Canada, the Athabasca Basin, how much glacial till we have. You can't see bedrock. You have to rely on geophysics. So it's just taking those new ideas, taking what's worked in the past, throwing it out there.
Gentlemen, I think that has been a wonderful session of one, sort of getting to know your thoughts on market, how Athabasca, stands out. And as I say, these are 4 stories I really like. So I appreciate you coming on and sharing the time together with me. We'll be following you with great interest, as they say. So thank you again, and we'll speak to you soon.
Thank you, Matt.
So much, Matt.